D-Street extend losses for the third straight session with Nifty now below that 25,200 mark. Benchmarks are on track to end the week lower. Hello and welcome. You have tuned into the closing trade right here on ET Now. I'm Srishti Sharma and with me today is Sharad Dubey. And Sharad, seems like the story continues for the benchmark indices. The consolidation is over through, but is the third straight day when we are seeing that the Nifty is seeing a decline while Nifty Bank is also on the back footing. But other than that, a lot of sector churning that's already at play, Sharad. For today, it's definitely the IT pack that is reeling under pressure. But on the flip side, stocks like HUL, SBI Life, Sun Pharma, they are your top drags on the Nifty 50 side. Yes, of course, it's been HUL which has maintained that leadership throughout the trading session and after the leadership change rather for the company as well. SBI Life has been one of those stock movers which was recommended by our experts as well onto the show, and look at the move today in this market as well. The stock is holding on to the gains of over 1%, and even select pharma counters like Sun Pharma, Cipla, throughout the day, they are also seeing some bit of a recovery from the day's lowest point. But Sharad, seems like that the star performer today has to be Glenmark Pharma. Look at the move, almost 14% jump over there.
Well, yes, Shrishti, this is a top gainer in the pharma index as well. And earlier during the day, it was at 10%, and then the circuit broke. And then it's at a new circuit, 15%. And of course, if liquidity numbers do match, there can be a second opening of the circuit as well. And we might see a 20% upper circuit in Glenmark Pharma as well. But also apart from this, the IT segment, if you have a look, TCS has been dragging the entire index. And of course, the Nifty heavyweights, HDFC Bank as well as Reliance, they are also dragging Nifty. And of course, we are expecting that this would be a normal Friday, but it's turning out to be a fearful Friday. Let's not call it a freaky Friday. It's not that big fall, Srishti, but a fearful Friday definitely for 3 trading sessions. We are seeing a downtick coming in, but the scary part, Srishti, is the broader indices. Yesterday also the broader indices, we see it was the advanced decline ratios in the favor of bears, and today also the numbers are looking same. So it's better to trade light maybe and then go ahead, because there's a weekend coming in and global cues is also there, right? And there can be any announcement, especially in the trade deal front.
Well, indeed, that's what everybody has been waiting out for, what really pans out when it comes to India-US trade deal. And since we have already kick-started the earnings season with TCS, a lot of upcoming earnings will definitely decide and actually set the tonality of the market as well. And we'll also tell you that which are the stocks that you should be watching out for. But before that, let me also connect with our experts on the show today. We are being joined by Sunny Agrawal, Head of Research Fundamental at SBI Cap Securities, as well as Kunal Bothra and Sharan are also here with us. But Kunal, let me first come to you. Like Sharad has been saying that it's turning out to be not that a great Friday, but anything to freak out at this point in time?
Doesn't look like, I think it's just about the subtle selling, lack of buying, no buying interest, and maybe mild bit of selling which is causing this, kind of a reaction in the market. So, I would probably believe that it's a natural course after this, fantastic rally which we've seen, that the markets are going through a mean reversion phase. Now you look at across the globe. So I think other than India, when you look at China, when you look at the other Asian markets, you look at US markets, the European indices, I think there's been a lot more, state of a calm over there. Many of the global asset classes, crude oil, has ebbed off from those, $75, $80 to now, I think 67, 68. You're seeing, the dollar index also hovering on the 96, 97 mark. So globally, when we look at the data points, it just whiffs of that, we are going to that phase of a mild pause or a mean reversion. The only concern or the bigger concern for the market is lack of leadership across sectors. And I think that's, the one concern which is not letting the markets go into any kind of a major process of a bounce back, because if there are no major sectors, major large cap names which tend to participate, the markets would eventually go into a inertia based of correction.
That's correct, Kunal, on that front. But banking numbers, the numbers of Q1 numbers, the operational numbers were decent. Now those numbers and earnings will start coming in, right? And of course, we saw the IT space. And if you look at it, FIs have a higher concentration in banking and IT. Now we are seeing downward pressure in IT. So are you expecting the FIs to move to banks if the numbers are good in the earnings in the coming weeks? So how is the banking pack placed? Because it's not that big of a drag when it comes to Nifty Bank currently.
Yeah, absolutely well pointed out, Sharad. So, the money always generally flows through the path of least resistance and where there is high confidence. Right now, for example, the high confidence zone is FMCG. Maybe I think eventually if the results start to come out positive, you might have the banking stocks also seeing some bit of positivity there. So maybe the likes of ICICI Bank, HDFC Bank, Kotak Bank, I think has been apparently doing very well for itself. So you might have many takers for the private sector banking names. But it looks like that the markets are waiting for those signals to come out. They don't want to jump the gun. They don't want to anticipate, and that's why I think even if the last 4 5 days, for example, just as an offset example, the IT stocks, you'd already seen HCL Tech, TCS, going through a correction of 5%. But even after results yesterday, the stocks are down another couple of percentage points. So I believe that the markets are into a phase of a wait and watch, and if the results come out positive, money should flow back into those high performing sectors.
All right, so that's the take coming in on the banking space and select other counters as well. But with this, Sunny, wanted to have your take on the IT pack because, yes, of course, markets have digested TCS earnings. And given the fact that the company is not that bullish on the growth outlook ahead, they are anticipating some bit of a pressure in their discretionary spending. We have already seen very tepid move coming in on the other IT majors as well, which are indeed facing weakness. But within the lot, Sunny, it's KPIT Tech as well that is holding on to the gains of 2% right now. Give us your analysis on the overall IT space and any stock that you would like to bet on in this correction.
Yeah, good afternoon, everyone. Yeah, I think the way commentary of TCS and Tata ELX has played out, it clearly seems that there is a lot of uncertainty in terms of demand environment, and at the same time, client want to increase the productivity using various Gen AI tool, and at the same time want the benefit of the same to be passed on to him or her. So I think overall a pretty weak demand environment as far as IT sector is concerned. Coming to a stock specific action or price action, I think most of the negatives are already in the price, at least for a tier one IT companies, whether it is a TCS, Infosys, HCL Tech. I think the issue is with a mid cap IT company. So there the valuations are very expensive compared to their large cap peers. In case the demand environment or the commentary is on weaker front from mid cap company, we can see a sharp correction in a mid cap IT pack. Moving on to the KPIT, I think again KPIT during the mid-quarter update has already alerted the street that the deal execution is not playing out as per expectation, and the deal win is likely to slow down. So to that extent, I think all the negative news is already priced in for KPIT Tech. Maybe any positive development on automobile side can act as a positive for KPIT Tech. But given the trade uncertainty which is going on in a global automobile industry, and at the same time the transition from ICE engine to electric or for that matter hybrid, I think there is a lot of dynamics of industry are changing very rapidly. To that extent, again, we expect that KPIT can deliver a very muted set of commentary as far as growth for FY26 is concerned. So I think let's wait and see what is the commentary of management on KPIT.
Yes, thanks for your views, Sunny. But Srishti, one exciting point is there regarding KPIT. They have higher exposure in auto segment.
Oh, yes.
If you compare it. And the commentary which has come from TCS, that's where BFSI segment has gone wrong. And most of the large IT players, 60 to 70% of the revenue comes from the BFSI segment. That may be the reason why the street is factoring in a jump in KPIT Tech as well. But now let's move on and join in with Sharan. Sharan, which sectors you are looking good over here? Of course, there's a sectoral churn happening and defensives are the flavor of the day with FMCG and pharma pack being the top sectoral gainers today. But Sharan, what are you picking up in sectors and is there any good buy stock recommendation here?
So good afternoon, Sharad and Shrishti. Sector-wise, I don't see that much movement, but you have seen somewhat of a buying coming in Nifty PSU banks from a lower levels. So some upside, but not that much. I think everything is just going down except for pharma and FMCG. So you can see a clear shift that money is quickly flowing from one sector to another. But I still feel PSU banks will outperform. That is my view for the last 2 weeks, and I don't see that changing. And in stock specific, I think you cannot pinpoint on a single stock or a single sector. Every day, some other news is coming from some sector, and the movement is more or less a single stock from a sector, not the whole sector per se. and that is moving a lot, and rest there are also like laggards and winners. So like it's more or less 50-50. So the movement going ahead also will be again 50-50 kind. Not every sector will see a full kind of rally, but again, if you concentrate more on PSU banks, I think there's a good chance that you'll make a lot of money in this downtrend if you do a buy and dip strategy.
Or-
Sharan, is there any specific stock in the PSU space? I know you were bullish on Karur Vyasa Bank and Indian Bank as well.
So again, Sharad, the one day the stock goes up and after 2 days again it goes down. So I would suggest a buy on dip strategy. Stocks can be your Indian Bank, Bank of Maharashtra, Canara Bank is still looking nice, PNB is looking nice. So concentrate on these four banks. I think a lot of money is to be made in the long run, and I think Nifty is more or less near its bottom. I see a 100 or maybe 150 point more decline, and this is the right time to buy, because once the market reverses, you won't see these prices again, and you'll see a sharp rally in banks and Nifty PSU banks at least.
Because a lot of stocks from their lower levels have seen a good recovery. Case in point being Paytm, other than that, Zomato, these are your counters that have been doing pretty well. In select pharma counters have also seen good recovery, because at the start of the day it was Sun Pharma and Cipla. These were actually trading in the red, but throughout the day we are seeing a good recovery on these counters as well. But with this, let's also welcome on board Siddharth Khemka, who is the head of retail research at Motilal Oswal, joining us on the show right now. Hi Siddharth, good to be speaking with you. Firstly, we have talked much about the IT space. So Siddharth, why don't you help us understand that which are the sectors that are looking good to you and interesting to you right now, given the fact that we have already started the earnings season. IT is through, but other than that, upcoming days, we have some of the retail counters as well, which will be posting their numbers.
Hi, good afternoon. Glad to be on the show. I think if you look at IT, just started with TCS. We expect a better commentary even last time. If you look at Q4 commentaries, except for TCS and Wipro, the commentaries looked pretty much better or came pretty much better from the other IT companies. So we really have to wait for the likes of an Infosys and Tech Mahindra and HCL Tech also to come out with the commentary to have a better view. I think in this quarter, what we are looking at is some of the domestic focused sectors to come out with strong numbers. For example, capital goods, we are seeing that the government capex in the first 2 months of the financial year, April, May, has been the strongest after a lackluster spending last year. Government seems to have front-loaded the capex for this year, and that effect is clearly being visible in capital goods. Cement is other sector where we are expecting an aggregate 35% earnings growth. Volume growth is decent. Price on an average has sequentially moved up by 5%. Costs have remained benign. So that is another sector which is looking good. Another sector is a niche sector, EMS, electronic manufacturing, pretty high order book, consistent delivery. So overall, we are expecting about 46% earnings growth there. Healthcare, pharma, as you rightly said, a pretty steady quarter, has been consistently delivering, you can say, low to mid double-digit earnings growth for the last 7-8 quarters. For this quarter also, we are expecting 11% growth in healthcare space. Retail, there is some pressure, especially if you look at what the value retail business updates have come in from the likes of some of the bigger names, plus including the likes of Trent, where the earnings growth have subdued compared to the earlier high growth. So still expecting an earnings growth of about 20% for retail, but I think that is a little bit lower than what the street was expecting.
There's mixed reviews coming in when it comes to the operational update in certain consumption names, but a kind of tad bullishness in select IT counters as well, and that's what we are seeing, the recovery in Tech Mahindra also. But speaking of IT earnings, HCL Tech is all set to report its Q1 numbers. Let's go across to Pulkit to get us what the street is expecting.
TCS has released its earning. Now it's time for HCL Tech. So if we talk about the expectations, for revenue in USD terms, it would be around 1% up. In INR terms, around 0.3% up. If we talk about EBIT, it would be slightly down, around minus 3.4%. If we talk about EBIT margin, it would be down around 70 basis points. For profit after tax, around minus 2% down we have the expectation on the Q on Q basis. If we talk about the management commentary, deal wins are likely to be stable, but revenue conversion would be sluggish. Services business expected to grow mild, but the products and the platform business may drag in this quarter. Europe and UK likely remain to be soft due to macroeconomic pressures. BFSI and life sciences business may remain stable, but yesterday after the commentary of TCS, this can also fluctuate in a negative way, while manufacturing, high-tech, consumer goods likely to be in pressure. If we talk about the FY26 guidance that management has given in the last quarter, it would be around 2 to 5% for the whole year. For margin, it would be around 18 to 19%. The key points that to be focused in the management commentary would be on the demand outlook, how the demands are shaping up. FY26 guidance, will they change it or it would remain stable? The discretionary spend outlook from the clients, deal pipeline, Gen AI adoption, headcount and attrition rate, and the most important thing, that is geopolitical tension and tariffs. These are the things that we need to look for at CL Tech.
All right, thank you so much, Pulkit, for getting us all those details. But time now to shift focus to Avenue Supermarts. That is also all set to report its Q1 earnings. And remember that Q1 update has already been below the estimates. Let's go across to Snehi to get us more details on what the street is really penciling in. Snehi.
Well, yes, all eyes are going to be on Avenue Supermarts, or D-Mart as we popularly know it, the company's Q1 FY26 earnings. Remember when the company recently came out with its Q1 FY26 updates, it was tad below street expectations and the stock didn't do very well that day. So here's what we are penciling in for D-Mart's Q1 FY26 earnings. Based on the revenue provided by the company in their update, this number was at 15,932 crores compared to 13,712 crores, which is an uptick of 16.2%. Based on this number, we are seeing EBITDA at 1,348 crores compared to 1,221 crores, which is an uptick of about 10.5%. Net profit is seen at 874 crores compared to 812 crores, which is up about 7.5% on a year-on-year basis. Now, based on these margins, we are seeing at 8.4% this time compared to 8.9%. So, a 50 bips cut on that front, a 0.5% cut is what we are seeing over there. Remember, the company has added 9 stores in Q1 and the total store count is 424. So, watch out for that as well. In terms of key expectations, continued high wage cost and weak sales per square foot are expected to weigh on margins. That is why we are expecting some margin pressure this time. And in terms of like-to-like growth or the same-store sales growth, it's expected to be in mid to high single digits. What's going to be important to watch out for when the numbers do come out? The like-to-like growth is going to be important to watch out for. The company's outlook on general merchandise and apparel will be important to watch out for. Commentary on impact of e-commerce and quick commerce will be important to watch, and store expansion plans for FY26 will be a key monitorable as well. So watch out for D-Mart when the numbers do come out. We're expecting a slightly mixed set of numbers from the company.
Thank you very much, Snehi, to giving out the preview for Avenue Supermarts. Sharon, the stock is Reliance Jio Financial Services, and of course, the stock has actually done well on a 3-month chart basis if you look at it, but there's a slight profit booking coming in. So the long-term basis, if you look at the positional aspect of Jio Financial Services, what are your take on that? Already the 3 months, there's a stock up move of almost 42%. It's taking a breather currently. Do you see a consolidation happening in the charts, or positionally, if you look on a monthly basis, will we see another round of buying happening?
Sharad, till yesterday, I think the chart was showing a good breakout, but I think on back of Nifty's decline today, it is also showing a correction of 1.5%. So I don't see it as a major correction. All stocks follow the Nifty now and then. So I think in the next 2-3 days, it can be a good buying opportunity. And breakout can be seen about 330. If the stock breaks out about 330 level, it'll be an excellent breakout. And I think it can see levels of 350 to 370. These kind of profit booking sessions is a good opportunity to enter the stock. And you can actually enter till 320 to 315 levels. If you get these kind of levels, do a buy on dip strategy. I think you can get a good breakout in the next 2 or 3 weeks, about 330 to take it to 350 to 370 odd levels.
So Jio Financials, one can look to buy the stock at lower levels, maybe around 315, 322 is the range that if you at all get the stock over there, that could be a good opportunity. But Siddharth, help us understand that how are you looking at the whole life insurance space, because just yesterday we had that insurance data as well, and coming up the next week we will have HDFC Life numbers within the insurance pack. That will be the first one who will come out with the numbers, and the stock, I remember, gets very volatile during that time. So what on the earnings front as well as the industry growth wise, what's your expectation and any of your preferred bets that you're recommending to your clients right now within this space?
Yeah, sure. I think the numbers that have come out on the monthly basis, they're a pretty strong set of numbers for some of the companies. If you look at Max Financial came out with strong numbers. Overall, the growth for private players improved to around 13% from about 7% in May. That is what we have seen. Improvement has been fueled the industry growth to about 10% in the weighted premium terms. And some of the listed players, for example, Max continues to grow fastest in the individual WRP with a growth of 22%. SBI and HDFC both a stable growth of 12 to 14%. I think overall the expectation has been a decent earnings growth for insurance companies, especially the life insurance players in this quarter. And some of our preferred picks in this space are HDFC Life and SBI Life as our preferred picks, given the steady growth. Margins are improving for both HDFC Life because of the changing the product mix that they are doing and the steady growth that we are seeing. Plus, valuations have been comfortable for both of them. SBI Life and HDFC Life are a preferred pick within the life insurance space.
So HDFC Life and SBI Life preferred picks by Siddharth. Kunal, question is for Bharti Airtel. Stock is down more than 5% in the last two trading sessions, but it had a good run up amongst the telecom names, a decent name, and flows are also very strong in the mutual fund segment for Bharti Airtel. Are we seeing more profit booking now? As there will be more significant profit booking coming in, or are you looking at modes of consolidation, because there are selling counters happening?
So I believe that this could be a change of trend for Bharti Airtel for the near term at least, because such kind of intensity where the stock used to be detached with the market trends overall. Now over the last couple of days you've seen the stock getting aligned with the market trend, which is a very rare kind of a behavior for Bharti Airtel, because generally when the markets used to go into a correction, the stock remains into its own zone of consolidation. Now with this last 2 days of high volume sell-off, in fact today the volumes are much on the higher side, even though the price intensity is not as sharp as yesterday. But that tells you that traders are looking to exit the stock or maybe create fresh short positions on the stock price, looking at the F&O data. So I believe that may not bode out well for Bharti Airtel over the near term. In fact, even on the daily charts, the stock is now threatening to retest its 50-day moving average, which is just, I think, 10-15 points lower than the current market price for the stock price. A break below those levels could actually retrace the behavior for Bharti Airtel, and we may expect the stock to fall another 50 to 70 points at least over the near term.
All right, that's about Bharti Airtel. Yes, of course, it's the third straight day where we are seeing the stock under pressure. But Siddharth, some of the brokerage reports are highlighting the fact that yes, of course, the street has already built in that the tariffs may hike, may get a raise towards the end of FY26 rather. But at this point in time, when we compare the emerging market rates as well as the Indian rates, they are at par. And along with that, the valuations are fairly priced. What are your views on this? Do you agree with this particular view, and are these valuations justified? Because Bharti Airtel has been one of those multi-bagger at least of late and has been one of those strong candidates.
So yeah, I think I would agree on the part of a lot of that tariff hike is already baked in the prices. But if you look at in terms of earnings growth, telecom has been reporting a steady earnings growth, especially if you look at Bharti Airtel and Reliance Jio. Both we are seeing the combined wireless revenue as well as EBITDA for the three private telcos to improve on a sequential basis. Bharti has been registering strong growth, 16% wireless ARPU growth is what we have seen last year, and that has been much better compared to Reliance Jio's about 12-13%. What is also helping Bharti is the stronger rollout in the 5G segment, where the client upgrading is happening, and that is helping the improvement in ARPUs. If you look at next 2-3 years, I think one of the best large cap company would be a Bharti Airtel, consistently delivering a 30 to 40% earnings growth. So I would believe in the near term there may be some consolidation, but any correction in the stock price would be a good opportunity to add into a large cap name with a steady earnings growth in excess of 30%. So I would be a buyer on dips in Bharti Airtel. We remain positive. We have a target price of 2,200, but I think even this quarter earnings, we are expecting an EBITDA growth of 38%. Net profit should grow sharply. Plus the strong cash flows that they are delivering, that should also help sustain the premium valuation.
Exactly. There's a buy on dip strategy coming in for Bharti Airtel, and Siddharth was speaking about free cash flows, and Indus Stars is also one stock which was depending on higher free cash flows, especially with the debt getting reduced from Vodafone Idea. Indus Stars, if you look at the stock, has fallen from 430 odd levels and trying to recover from that 400 mark, and also in the day's trade it's high as well. Of course, it has a good free cash flow dividend yield as well, which goes on to between 14 to 18 odd percent. But now let's go on to the STBT, BTST trades. First, Sharan, what would be your trade, if any?
Those two were my trades, Sharad, Cummins and SBI Life. So you can take it as a buy today, sell now trade also, and you can exit on Monday also.
That's the BTST idea coming in from Sharan. But Kunal, any of your ideas as well?
So I gave BSE as well as Cummins, but I think in terms of fresh calls, I would look out for Paytm as a potential breakout candidate. The stock, I think, filling a major gap, which is around the 957 to 960 mark. That I believe could be a potential turning point for Paytm over the near term. So I think if the markets board up well over the next week, then we may expect the stock to head towards at least 980 to 1000 over the next couple of days. Stop loss for this trade could be kept at 940.
All right, so those are the calls coming in from both of our experts then. But well, just a few minutes left before we shut shop. It's HUL, which has been one of the top gainers, followed by some of these life insurance counters as well. And other than that, within the NBFC space, it's Piramal Enterprise as well that is seeing an uptick, because I remember when we started the show, the stock was up around 2%, but now in the last half an hour or so, a big spike coming in on this counter. Almost a 4% jump is what we are seeing. Sharan, can you help us with the chart check on this one? Because Piramal Enterprise is one of those very, very volatile counters. But what are the charts telling you right now?
So, Shrishti, it has given a descending trend line breakout. The last high it made was around December 24. And I think it's more or less given a good breakout today with huge volumes. I think it's one of the highest volumes since May. So I think the trend is about to continue, especially on a day when Nifty is down by almost 200 points. So it's a very strong price action, again trading above all its moving average, given a nice breakout. I think if one wants to enter, can actually make a new position and continue with a positional buy call on this with a stop loss of around 1161, and target should be around its previous retest highs of around 1260 to 1290 levels. And I think if the trend continues, you can even see levels of around 1400.
Yes, Piramal Enterprises 6 months chart, it's up almost 23 odd percent. And of course, the NBFC part, if you look at it, the transmission of lower interest rates, that also augurs well, and most of them are actually trading between almost 0.8 to 3 times its price to book ratio as well. Of course, apart from this, the new age tech companies, especially Eternal, that's in focus. That stock has been actually increasing its band prices. Now earlier it was traded at 240 to 250 levels, now it's 250 to 260, and now currently it's going between 260 to 270. Kunal, if you would like to have a chart check on Eternal, the strength looks strong.
Yeah, it looks strong, and in fact, I think just about a couple of days back, we were discussing that Eternal's chart are indicative of a golden crossover, where the 50 DMA is about to cross over the 200 moving average. I think more or less today we are seeing that instance happening on the technical charts for Eternal. This could actually be very positive for the stock over the near term, and we've seen over the last many days that stocks which have actually given golden crossover, they have a tendency to rise up by another 5% to 10% before they go into a very similar kind of a gradual correction or mild profit booking mode. So I think even if we look at Eternal from current levels, we can expect the stock to head towards 275 to 285, potentially on the back of this golden crossover, which is a very important technical phenomena over the near-term charts.
All right, that's about it, Arnal. Yes, the stock has seen a good move, especially in today's trading session. But Siddharth, what's your overall sense coming in on the pharma space? Because for today, yes, Glenmark Pharma has been the star performer after that licensing pact with FV, and the kind of numbers or the kind of deal that it has been, what a breakthrough for Glenmark Pharma, especially when the drug is still in the phase 1. But what does it really tell you about the sentiment pinning, or rather making in the making, for the Indian pharma players, and especially for those who are on the R&D side? Because for Indian companies, we never had such kind of a scenario wherein the Indian companies were rewarded so very well. But with Glenmark Pharma cracking such a deal, is the sentiment can move higher from these levels?
Srishti, I think definitely one of the best deals that we have seen in the pharma space. I think globally it is the fourth largest deal that for a product that Glenmark has been able to achieve, and definitely it does a lot to improve the management credibility in the R&D capabilities for Glenmark. So that's a huge, I think, thumbs up for the R&D work that they have been doing. The subsidiary, the innovation subsidiary for Glenmark, I think does give a validation that Indian pharma companies can also do a lot of R&D, and those products can be commercially viable. So we definitely see a big positive for Glenmark itself, a re-rating of the management credibility. The deal itself adds roughly about 500 rupees net present value to the future cash flows. So we see somewhere about target price of 2,430 rupees. I think overall, as you rightly said, the sentiments for the domestic companies, pharma companies, especially in the R&D space, that gives a big boost in terms of hopes that some of the other products in the pipeline can also see commercialization as well as improvement in the deal valuation. So, a positive direction for the Indian pharma companies.
Yes, pharma space is something to watch out for, and of course, 3 months, the tariff deadline was there, and 3 months ago, you could see that there were forward bookings of revenue as well, and that's why we saw the export numbers going very strong. Of course, let's have a look at Bandhan Bank. That stock is, of course, in a volatile space, so down almost 1.5%. What are the technical charts suggesting when it comes to Bandhan Bank, Kunal?
So I think so short-term wise, I would probably believe that the stock could correct a little bit further from current levels of 175. Again, I think the stock is threatening to go below the 50-day moving average. And apparently over the last, I think 4 months, the stock has been taking support at the 50 DMA. So if this 50 DMA level gets breached, which is at 173 mark for Bandhan Bank, then I believe that we could be in for at least another 7 points to 10 points correction, which could be a decent 5% correction over the very near term.
All right, so that's the take coming in on Bandhan Bank. But well, of course, we are counting down to the market close. But yes, the upcoming week is going to be indeed an interesting one, because we will have a lot of these Nifty earnings as well. HCL Tech will be the first one on 14th of July. That will be in focus, followed by HDFC Life on 15th. TechM, Wipro, Axis, Geo Financials, and even JSW Steel will report their earnings. But Siddharth, one other sector that I quickly wanted to have your take on is actually the whole metal pack, because just in the morning we were actually chatting with a metal expert who's highlighting that there has been a bit of a price hike in the steel prices globally, which can have implications on the domestic market as well. And well, of course, because of that safeguard duty, the metal and the steel prices as well, they have been holding firm. What's your sense that you're getting on the metal pack? A renewed investor interest is what we can expect, or the sector is just silent and flat right now and no momentum expected?
I think it's a mixed bag, because the sector is driven by global geopolitical as well as what is happening globally with the US tariffs across the region. If you look at on the domestic front, the HRC prices have surged about 3,300 rupees per ton on a Q-on-Q basis, primarily led by the 12% safeguard duty. So the global prices continues to remain under pressure because of the Chinese oversupply. and the weak consumption in China itself. If you look at the non-ferrous front, I think commodity prices saw sequential price correction, a 7% Q on Q decline for aluminium and zinc, while copper is the only one where the prices have kind of increased on a sequential basis. I think it's a kind of a mixed bag. We expect the ferrous companies to report a volume decline of around 11% on a Q-on-Q basis, which will still be a 6% growth on a Y-on-Y basis. And overall, what we are seeing is that the EBITDA will increase by about 2% on a sequential basis and roughly about 11% on a Y-on-Y basis. So clearly, I think it's a steady, stable quarter. Nothing much to expect from the metals in this quarter.
All right, so that's the take coming in on the metal pack. Let's watch out for that as well. But with this, Sharan and Siddharth, thank you so much for taking the time out and speaking with us.